Mistakes, we all hate making them, don't we? And when you are a buyer purchasing a house, there are mistakes that you can make that can mess up the entire process, specifically when you are getting a mortgage. There are certainly other mistakes you could make, but today what I want to focus on are mistakes that buyers make once they are under contract and under an application to mortgage their new home. These mistakes can cause the lender to stop what they are doing, to not go through with the underwriting process, to cause a delay in your closing. The issues and the problems can just mount. So let's go through the mistakes that buyers make once they're under contract to purchase a house that can be a huge problem to get you to the closing table. Mistakes to avoid as a buyer who is applying for a mortgage. That's what we're going to talk about today, and we're starting right now. I'm Sherry Ann Green with Coldwell Banker. Welcome to my YouTube channel that guides home sellers and home buyers in Washington, D.C. and Northern Virginia. The first mistake many buyers make when they are under application for a mortgage is depositing large sums of cash into their bank account. Now, this probably sounds counterintuitive. Sherry Ann, I am buying a house and I need cash for closing, for my down payment. Why would it be a problem to deposit money into my account? Aha! Well, the bank, the lender, has to source all the funds that you have in your account. Have they come from your job? Have they come from an inheritance? Have they come from a GoFundMe page? Where are all those funds coming from? Not being able to source where a large sum of money is coming from can be problematic. So if you are about to inherit some money or get a bonus at work or are the recipient of a GoFundMe page, you need to let your lender know. Now, I keep saying this GoFundMe page because it actually just happened. I was the listing agent. I had a buyer who came and made an offer, and part of their funds for their down payment were coming from a GoFundMe page. What an interesting idea. However, half of the donations were anonymous, so the lender couldn't even source those funds to use them. I think you see my point. Any form of cash, any sum of cash that you are going to be depositing into your account, your lender needs to source. So don't deposit any large sums of cash into that bank account, into your bank account, until you've discussed it with your lender first, so you know how to document its source. On the flip side of that is don't increase your credit and don't increase the amount on your credit cards. When you apply for a mortgage, your lender looks at your debt to income ratio, and any change in that while you are under the mortgage application process can be problematic, and it can be a mistake that you make that makes a difference. You may want to buy new furniture for your new home. You may want to buy a new car for the garage. You may want to buy a new boat, but don't buy any of those things until you have closed on the loan. Keep your debt to income ratio where it is when you apply for that mortgage so that you have smooth sailing all the way to closing, and then you can buy your boat. The next mistake many buyers often make is very innocent in nature, and it's meant to be helpful, but it can be problematic, and that is co-signing on a loan with someone else. It doesn't matter if it's your mom or your best friend or a coworker. Do not do it. You cannot co-sign on a loan for someone else while you are under application to purchase a house with a mortgage. It doesn't matter if this person has said they can make all the payments and they will make all the payments and they've written you a certified notarized letter that says that too. The lender is going to count that loan against your debt to income ratio, and it can be problematic. Do not co-sign on a loan for someone else with someone else while you are under the mortgage application process. The next mistake many buyers make is switching bank accounts. You're switching everything else in your life. You're moving homes. You might be moving to a new state, and you may think, well, I need to get a new local lender. I need to get a new local bank. Don't. Again, your lender has to source where all of your money is and where it came from. And if you are upending your finances and moving them into a new financial institution, it can be problematic. If you're moving states, I get it. You may want your new local banker to take care of your financial future as you move into your new home. Just wait to do that until after you have closed on the loan, you have closed on the house. Then you can switch banks. The next mistake many buyers make is they open a new line of credit, whether it's for a car, as we talked about, or a new credit card. Don't do it. Don't open any new line of credit, because that too changes your debt to income ratio. It makes it different than what the lender has already seen in that pre-approval process, and it can mess up the underwriting process. So do not open any new line of credit, even for yourself, as you are going through the mortgage application and contract to close period. On the flip side of that is don't close any of your lines of credit. Again, your lender has already gone through this process to look at your debt to income ratio. They know what it is, and if you're pre-approved, they're happy with what it is, or at least they're satisfied. Don't change it by closing any credit cards at the moment. Get through the process of applying for that mortgage, and then you can clean up what you want to clean up. But leave everything where it is per that application until you get finished purchasing the house. The headline in all of this is clear communication. You want to make sure your lender knows everything you are doing from a financial standpoint. It sounds a little nosy, and it kind of is, but it's necessary. Just remember, that lender is giving you a large sum of money to buy this beautiful new asset for you. They need to know where all of your money comes from. They need to know your debt and income ratio is appropriate, and they need to know that you are a stable credit borrower. Keeping the lines of communication open as you go through that process is extremely important. What if you get a new job? Your lender needs to know. What if you get a raise? Your lender needs to know. What if you get a bonus? Your lender needs to know. They will find out, and they don't like surprises. So make sure you're telling your lender anything that could affect your financial picture, your financial portfolio, so that they can be prepared to tell you how to work through that as you work through that mortgage application process. There are a lot of things to know when you go to buy a house, whether it's the first time or the fifth time. My channel is here to help. Make sure you subscribe so you don't miss a video on the home buying process.